Now we can start.
A warm good evening to the dynamic chairman of the SIRC of ICAI, CA Jalapati, speaker of the evening, CA Rajiv Khandelwal, brothers and sisters of the fraternity. I welcome all the participants here with us today for this much awaited session on an overview of prohibition of Benami transactions. As professionals, we are aware that change is the only constant factor, especially when it comes to tax laws. The change has been very rapid in the last 4 or 5 years, and we do experience the change to be alarming, though exciting in a way. There have been reforms in the recent years to include demonetization, introduction of GST, Black Money Act, Insolvency Bankruptcy Code, new laws and labor laws, etc. We've come a long way. New laws mean ease of doing business, but they also mean more rules to learn, new procedures to follow, and this is not necessarily disadvantageous. We have seen the introduction of laws that affect both businesses and the common man. The need to disseminate knowledge is therefore all the more imperative. I welcome you all once again for this much awaited session on the overview of Prohibition of Benami Transactions. In the recent times, one of the laws which has gained a huge momentum is the Benami Transaction Law. The word Benami means without a name. In simple terms, Benami transactions refer to transactions which are made by a person in another person's name. There is a popular perception that Benami transactions are used to disguise the real ownership for reasons including tax avoidance, maintaining secrecy, creating personal wealth at the expense of businesses, parking unaccounted money, and a number of other reasons. The first reference to this law was made on 20th December 1972 by way of a reference we made by the Union government to the Law Commission. The Benami Transactions Prohibition Act 1988 was introduced to prohibit Benami transactions and to recover the property held as Benami. The old act contained about 9 sections. However, the rules, regulations, and procedures for the implementation of the law could not be framed, which made it very ineffective. Against this backdrop, the government decided to implement the new act. In July 2016, the Benami Transactions Prohibition Amendment Act of 2016 was enacted. This act came into force from 1st of November 2016. The amended law contains about 72 sections. The Act defines who a Benami is, what are the properties falling within the ambit of Benami properties, who is a Benamidar, etc. A typical Benami transaction involves transfer involving a consideration from between A and B with the transfer of property to Mr. C. But in today's increasingly complex world, it is important or imperative rather to take into cognizance the interplay between other acts such as Income Tax Act, where there are implications of the Benamidar and the beneficial owner vis-a-vis unexplained investments or credits, and also the impact of holding company structures for denial of beneficial ownership criteria, and implications of section 56(2) subsection 10, and whether transactions which are subject to GAR can be exposed to the Benami law. And there are also interplay between Companies Act and Benami law, where the reporting requirements of significant beneficial owners reporting and then are very critical at this point in time, especially with the increased reporting. And there are also interplay between Prohibition of Money Laundering Act, Black Money Law, where whether if PMLA is invoked, whether Benami law becomes applicable, or both of it are independent of each other. We have a very well-known subject expert, CA Rajiv Khandelwal sir, here with us today to guide us and throw light on the various implications on the prohibition of Benami transactions. On behalf of SIRC, once again, welcome you to share your expert insights on this interesting topic, sir. CA Rajiv Khandelwal qualified as a chartered accountant in the year 1984. And he has kickstarted his practice in the spheres of audit, company law, and taxation matters. He developed expertise in income tax and has carved out a niche in representing before tribunal and CAT appeals. He is actively involved in the tribunal practice in Mumbai since the year 2000 and regularly appears at the tribunals at Mumbai, Delhi, Kolkata, Bangalore, Ahmedabad, Pune, Jaipur, amongst others. He associates with advocates for High Court and Supreme Court matters, and he is ably assisted by his team of chartered accountants, which include his son, Advocate Neelkant Khandelwal, who is also a chartered accountant and practices as an advocate in taxation matters at the Bombay High Court. He handles tax litigation matters on behalf of various CA firms. He also appears before various authorities under the Benami law. He also regularly delivers talks on Benami law and various topics under the Income Tax Act. We welcome you once again, sir. The stage is yours.
Thank you, Mr. Srinivas, for the kind introduction. Friends, I am here because of Mr. Srinivas. It's given me an opportunity to share my views on the Benami law. My friends and brothers and sisters in the profession. As my friend said, nothing regarding change. There is nothing that is permanent than change. So change is only permanent. See, we were in the pre-COVID era, then we had COVID. Now we are creeping back to normalcy. We are getting better of COVID, but COVID has given some positives. Like we today have virtual courts, virtual tribunals. We have webinars. Today I am sitting in Mumbai and talking to my brothers and sisters in the profession in Chennai. Work from home is another culture that has come up because of COVID, and so on and so forth. Yes, there is truly interplay between various acts and the PVPT Act. My friend has already given a brief about the PVPT Act. The history about the PVPT Act. It was ordinance was promulgated on 19/5/88, known as Benami Tax Prohibition of Right to Recover Property Ordinance 1988, and this friends, this ordinance was repealed on 5/9/88, which gave birth to the Benami Transactions Prohibition Act. This name is now changed in the amendments of 2016 to the PBPT Act. So this 1988 Act extended to the whole of India except Jammu and Kashmir. Because of the removal of Section 370A from the Constitution of India, now we have this PVPT Act in Jammu and Kashmir as well, which is known as Jammu and Kashmir PVPT Act of 2018. So with this, friends, we can, I will do the screen share.
Visible, sir.
Yeah. Am I audible?
Yeah, you're audible and visible.
Yeah, yeah. Thank you.
Sir, 1 minute.
Necessarily, one who is the legal owner and the other who is the provider of the consideration, who is the real actual owner. He is the beneficial owner of the property. So two persons are required if the Benami Property Act has to be applied. Now I've given an example. B has earned cash income and he wants to put it to economic use without disclosing this cash to the tax department, and so B instructs his employee X to acquire an agricultural land in the name of X. Seller executes the agreement in favor of X, and X becomes the registered owner. However, the cash is provided by B, and all benefits of the land will be reaped by B. Now here, because there are two persons here now, one is the buyer who has provided for the consideration, and one is the Benamidar. Mr. X is the Benamidar, B is the buyer, and S is the seller. In all our examples, we will maintain this. We'll try to maintain this. That S will be the seller, B will be the buyer. Buyer is the real owner of the property, beneficial owner, and X will be the Benamidar. So here in this transaction of the agricultural land, the land is the Benami property, X is the Benamidar, and B is the beneficial owner. X is the Benamidar, and he is the legal owner or on paper owner of the property. Who has provided for the cash or the consideration? It is the actual owner, that is Mr. B. Friends, we often come across as to what is a Benami transaction, what is a sham transaction. The Supreme Court in way back in 31 ITR 28, in the case of Shri Meenakshi Mills, had occasion to give their view on what is a Benami transaction and what is a sham transaction. The Supreme Court said the word Benami is used to denote two classes of transactions which differ from each other in their legal character and incidence. In one sense, it signifies a transaction which is real, as for example, when A sells properties to B, but the sale deed mentions X as the purchaser. Here the sale itself is genuine, but the real purchaser is B, X being his Benamidar. This is the class of transactions which is usually termed as Benami. Sorry, there's some. Yes. So now what is a sham transaction? In a sham transaction, A purports to sell his property to B, though there is no intent. Though there is no intent to sell the property, there is no intent to give away the title or the benefits in the property. The arrangement is documented in such a manner that the title remains with the transferor. Now that is a sham transaction. Question is, how do we distinguish between a sham transaction and a Benami transaction? Because friends, a sham transaction will not be covered by the Benami Property Act, whereas a Benami transaction surely will be covered by the Benami Property Act. The fundamental question that one should ask oneself is, who paid for the transaction? In case of a Benami transaction, there is a consideration given, there is a property transferred, and someone makes provision for this payment of the consideration. So in a Benami transaction, it is a real transaction. The property passes from the seller to the buyer. And in case of a sham transaction, friends, the question that needs to be asked is whether any consideration is paid at all. So in a Benami transaction, there is transfer of, there is an operative transfer, title changes hands, and in case of a sham transaction, there is no such transfer, and the transferor retains the title, though there is an arrangement. Then friends, in the Principal Act of 1988, which had only nine sections, I will not get into much great detail on the Principal Act. because today more important is the act in its present form. So though these slides are there, I will skip them. I will send the slides to SIRC to be circulated. Now, to curb the shortcomings of the 88, the Principal Act, and to continue with the anti-black money crusade. Friends, the Modi Sarkar came to office in 2014. Their manifesto program was to hit the black money and the black money holders. Their crusade began in the year 2015 when they enacted the Black Money Act of 2015. The idea scheme of 2016, my friends in profession are well aware of this. This was operative from July to October of 2016. Then we had this PBPT Act on 1/11/2016, and we also had demonetization, the famous demonetization on 8/11/2000. So all these were intended to against the Black Money Act. This also I can skip, friends. Now these are the important definitions under the present PBPT Act. Section 210. So who is the Benamidar? Benamidar means a person or a fictitious person, as the case may be, in whose name the Benami property is transferred as held and includes a person who lends his name. So in our example, Mr. X is the Benamidar because he is only a name lender. He is not the real owner of the property. Section 212 is the beneficial owner. Beneficial owner means a person, whether his identity is known or not, for whose benefit the Benami property is held by a Benamidar. So the beneficial owner is the person who provides for the consideration and his identity is hidden. Section 2.8 deals with Benami property. Benami property means any property which is the subject matter of a Benami transaction and also includes the proceeds from such property. (226) is property, and friends, I need not read this very wide definition. It will cover, as you see, interest in the property. So it will cover a leasehold property. It will cover a letter of allotment in a property under construction. It will cover anything and everything. It will also cover the converted property. Here, if I may give an example, friends, we have section 2.8 and 226, both in the same slide. Let's say we have a bullion, which is a property under section 226. This is also a Benami property. Let's say bullion is also a Benami property. This bullion is sold and the money comes in the bank. Now proceeds from sale of Benami property is there in section 2.8. So this is again a Benami property. The money sitting in the bank is also a Benami property. Then suppose this with this bank balance we purchase land. Land again is a property within the meaning of 226, and because this is in the converted form, this is also a Benami property. So Benami property means any property which is the subject matter of a Benami transaction and also includes the proceeds from such property. Even a conversion of the property, if the original property was a Benami property, the converted property also will be treated as a Benami property. Section 2.9, this is the heart of the PBPT Act. Benami transaction means a transaction or an arrangement where a property is transferred to or is held by a person and the consideration for such property has been provided or paid by another person. Friends, in the Principal Act, Section 2C of the 1988 Act had only this as the definition of a Benami transaction. So this was very simple definition, and here a normal transaction could also be covered as a Benami transaction. Let me give an example. Son acquired son acquired a property and the funds were provided by father. If only clause A was to be applied in such a case, then this would have been a Benami transaction because the son has acquired the property, funds are provided by the father. So this falls under clause A of the Benami transaction. This was what was there in section 2C of the Principal Act. Now in the new avatar, we have the word and then the clause B. The property is held for the immediate or future benefit, direct or indirect, of the person who has provided the consideration. So the IO, the officer, has to satisfy the benefit test. He has to also, in his reference, he has to make a mention that this is a Benami transaction because of the property being in the name of X, funds being provided by B, and the property is held by Mr. X for the future benefit of Mr. B. Now this is very important. Unless and until the officer is not able to prove the benefit test that it is ultimately for the benefit of Mr. B, the transaction will not fall within the meaning of section 2(9). So this is a very crucial test, and the legislature in its wisdom has expanded this definition. Now there are certain exceptions, because it is not always that if the property is covered by clause A of section 2(9) but falls under exceptions, then also this will not be treated as a Benami property. There are 4 exceptions. It states a karta or a member of an HUF, as the case may be, and the property is held for his benefit or benefit of other members in the family, and the consideration for such property has been provided or paid out of known sources of the HUF. So if friends, if the consideration is paid for purchase of a property and the property is held in the name of the karta or any member of the HUF, then it will be carved out of the 2(9)A, clause 2(9)A, and this will not be treated as a Benami property. Friends will see that there is a rider that the money should be out of known sources. Let's take an example. S sells land to B. The seller sends land to B. S receives unaccounted cash from B. S deposits this cash in the bank and pays tax thereon as sale consideration for sale of land. Question is, will this cash be from known sources? Can one say that this cash that has been deposited into the bank and B has paid and S has paid taxes on this cash as sale consideration, can this be treated as known sources? The answer, according to me, is no. It cannot be treated as known sources, even though it is in exchange for the sale of land. But the question is whether B would say that this is paid by him, whether B will say that yes, he has given the cash to S, and if he on inquiry will not say that it has been given by him, then in that case this cannot be treated as known sources. So therefore the consideration from the HUF should be out of the known sources. Then the second exception is when the property is held by a person standing in a fiduciary capacity for the benefit of another person towards whom he stands in such capacity, and includes a trustee, executor, partner, director of a company, a depository, or a participant as an agent of a depository under the Depositories Act, and any other person as may be notified. Friends, this exclusion was required for various reasons, some legal, some traditional. Let's take an example. If a partnership firm purchases shares. Now, friends, you are aware that a partnership firm cannot open a demat account. Demat account will be opened only in the name of the partners. Now, in such a case where the firm purchases shares, the money will be given by the firm and the shares will be held in the demat account, where the demat account is in the name of the partners. So two persons involved. The main clause section 29A will get triggered, but by virtue of this clause 2 in the exceptions, this will not be treated as a Benami property. Now friends, the Depository Act, as per the Depository Act, the depository is the shareholder of all the companies. That is the NSDL and CDSL, they are the shareholders of shareholders in all the companies. If you see the register of members of these companies, they will have either CDSL or NSDL as the shareholder. So therefore, again here also this exception is there, because who is the real owner? The investor is the real owner. In the books of the depositories, the depository participants will be there, and in the books of the depository participants, the investors are there. So when dividend has to be given, it will be given to the investors via the depository participants. But if you see the register of members, it is the depositories who are the shareholders of the company. So again, therefore, by virtue of this clause 2, this is not a Benami transaction. Now then, friends, and any other person, what comes to my mind is that where there is a holding company and a subsidiary company relationship, and the holding company holds 100% of the subsidiary company shares, then to meet the requirements of the Companies Act, two shareholders required. So one would be a nominee, and the balance 99.9% shares would be held by the company. So this this nominee shareholder would otherwise, the transaction would otherwise have been a Benami transaction, but by virtue of this clause, it is carved out of the definition of Benami transaction. Then the third exception given by the Act is, except where the property is held by any person being an individual in the name of his spouse or in the name of any child of such individual, and the consideration for such property has been provided or paid out of the known sources of the individual. So if the third exception is when the property is held by any person being an individual in the name of his spouse or in the name of child. So if I purchase a property in the name of my spouse or in the name of my child, then again it will be treated as a Benami property by virtue of 29A, because the property would be held in the name of the spouse. The consideration has been provided by me, and therefore 29A will get triggered. Clause A and clause B also will get triggered. But by virtue of this clause 3, this will be carved out of the transaction as a Benami transaction. The only condition is that here also that the property should have been purchased by, out of known sources. But friends, there is a case of Manoj Arora versus Mamta Arora. The citation is given. Here, the husband purchased the property in the name of his wife, that is Mamta Arora, out of the funds which were known, which were from known sources. In this transaction had taken place in good times, but when there were trouble, the wife filed a suit against the husband, saying that the property is in her name and therefore she is the owner of the property. She should be given the possession of this property. Fortunately for the husband, that the money was given by him and it was from known sources. The court held that he is the de jure owner of the property. Though this is a Benami, though the wife is holding this as a Benamidar, but the definition of Benami transaction will not get triggered here. Then the fourth exception is when the property is held by any person in the name of his brother or sister or lineal ascendant or descendant. This is similar to spouse and child, as we just saw earlier, and here also the funds should be provided from known sources. Friends, looking at these four clauses which carve out the transaction from the main 29A, you will see that there is no reasonable cause given under the PBPT Act. If suppose the circumstances are such that the property is purchased in the name of, say, I'll give an example. There are two brothers, B1 and B2, who purchase a property, house property, and a date is given that the property will be registered on a particular date. Before that date, say B2 has to go out of India for some business purpose, and what he does is he transfers so he would not be available on the date of registration. So what he does is he transfers the money from his account to the account of his brother B1. On the date of registration, B1 makes payment of the consideration to the seller, and the property is transferred in the name of B1. Now, because the other brother B2 is not available, the property was transferred in the name of B1 as a sole signatory. Now, B2 in his books of account shows house property in the balance sheet. Now, this is the problem. B2 is showing this property in his balance sheet as house property, whereas the property is in the name of B1, and though the monies have been given from known sources to B1, but still this will be treated as a Benami property, because where the property is in the name of the brother, then it has to be jointly held by the other brother. So B1 and B2, both names should have been there. Otherwise, this becomes a Benami transaction. So section 29A, friends, had 4 exceptions. Now here there is 29B, a transaction, or this also will be treated as a Benami transaction. A transaction or an arrangement in respect of a property carried out or made in a fictitious name. So if a property is purchased in a fictitious name, now today immovable property cannot be purchased in a fictitious name because we have to give the Aadhaar card or the PAN card, and all these details are to be given. So therefore an immovable property in these days cannot be purchased in a fictitious name. However, a movable property can still be purchased in a fictitious name. Say for example, bullion is purchased, B funds the transaction, bill is in the name of X. So because the bill is in the name of X, this is a Benami transaction, and X is a fictitious person. This will surely be treated as a Benami transaction. Then clause C, a transaction or an arrangement in respect of a property where the owner of the property is not aware of or denies knowledge of such ownership. Friends, say for example, in a raid, if the raid officer asks a lady member as to in which firms you are an owner, in which firms you are a partner, and she is not aware. So this will be treated as a Benami transaction in clause C, that she is not aware that she is a partner in a firm. But don't worry, the other evidences are there that she is a partner in the firm. So this will still come out of the rigors of the Benami transaction. But the thing is that the owner should be aware that he or she is the owner of the property. Now, suppose she is not aware of the profit sharing ratio. That is not that much of a problem, because at least if she is aware that she is a partner in a firm, that is good enough. Because what clause C says is that in respect of a property where the owner of the property is not aware of or denies knowledge. So she is aware that she is a partner, but only thing is that she is not aware of the profit sharing ratio. Fine, no problem at all. In such a case, clause C will not get triggered. Then clause D, a transaction or an arrangement in respect of a property where the person providing the consideration is not traceable or is fictitious. So again, in such a case also, this will be treated as a Benami transaction. Friends, there is an explanation after these clauses A, B, C, and D. Now this is in a very narrow campus, so we can deal with this a little later or at the end, because I have chosen some 4 or 5 examples to be shared with you. So we can skip this for the moment. Now, on the basis of sections 226 read with 28 and 29, the certain questions that will make these definitions more clear. Whether the term Benami property covers only immovable property. So can a movable property be treated as a Benami property? Surely it can be treated as a Benami property. So it is not only immovable properties. As we took an example of bullion. Bullion is a movable property, and that can also be treated as a Benami property. Whether will an undervalued property be treated as Benami property? Friends, adequately valued or properly valued, these are only matters for income tax. That is not a matter to be considered under the PVPT Act. Even if it is an undervalued property, for PVPT Act, one has to only restrict to section 29A as to what is a Benami transaction. If it falls within the 4 corners of 29A, 29, then it will be a Benami property. Otherwise, it is not a Benami property. So even if it is an undervalued, overvalued property, these are matters for income tax and not here. Whether a property located outside India can fall within the definition of a Benami property, no. A property which is located outside India will be covered by the Black Money Act. That is a specific law for properties located outside India, and PVPT Act being a general law will not apply. So there is a specific law to deal with such properties. So the Black Money Act would apply. Whether there can be a situation that part of a property is treated as Benami and remaining part not a Benami. Yes, there can be situations where part of the property is treated as Benami and the other part is not Benami. Let's take an example. There's a 25-story building and 20 stories are held in the name of the persons who have provided for the consideration. So if they have provided for the consideration, it is in their name. It is not a Benami transaction at all, because as we discussed, two persons are required for a property to be termed as a Benami property. Here, the funds are provided by the purchaser and it is held in the name of the purchaser. So therefore, these 20 stories will not be treated as a Benami property. Now let's take example of the 5 other stories which are held in the name of X. Now X is the Benamidar and the consideration is provided by B. So in such case, these 5 stories will be treated as Benami property. No two opinions on that, because here the property is held in the name of X. X is the registered owner, legal owner, and B is the person who has provided for the consideration, and therefore he will get the benefit of this property. Therefore, he will be the beneficial owner, and therefore these 5 stories will be treated as Benami properties, and the transaction will be treated as a Benami transaction. Whether can a property purchased transferred in the name of unborn baby be treated as a Benami property? No, friends. If you buy a property in the name of an unborn baby is a person which is defined, and therefore this will not be a case of a name lender or a fictitious person. This will not fall in that category, and therefore property purchased in the name of unborn baby will not be treated as a Benami property. Unaccounted money part of purchase consideration, is the transaction Benami? Now, if unaccounted money is paid as part of the purchase consideration, friends, 2 instances. One where the buyer B, he gives consideration in cash to the seller. He purchases a property, say worth 100 crores, pays 80 crores by check and 20 crores in cash. The property is held in the name of B. So here, in such a case, question does not arise. It will still not be treated as a Benami property, because again here also 2 persons are not there. The consideration is provided by B and the property is held in the name of B. Therefore, even if unaccounted money is used to purchase the property, it will still not be treated as Benami property. Take another instance where B sells land to a buyer PQR, sale for rupees 5 crores, 4 crore is by check and 1 crore is in cash. Again, here also, if this cash is banked by B and pays tax thereon, here again it will not be this unaccounted money. B will not say that he has given cash. So this will here unaccounted money, if you have used to purchase the property, it will be treated as a Benami property if it is purchased in the name of child or spouse or anyone. Because as we saw in the earlier exceptions, if the property is purchased in the name of spouse or child or brother, sister and other relations, then it has to be from known sources. Now this cash, even if it is banked and we have paid the taxes thereon, it will still not be from known source, because from where has the cash come? The giver of the cash will never accept that he is given the cash. So therefore, under such circumstances, it will be treated as a Benami transaction. Now, authorities are defined in section 2.6. These are the officers who will get the ball rolling under the PBPT Act. The various authorities are defined in section 2.6, and these authorities are initiating officer. Friends, he is like the assessing officer in the Income Tax Act. Then we have approving authority. He is equivalent to a joint commissioner or an additional commissioner who is above the assessing officer. Then we have an administrator here. He is the tax recovery officer under the Income Tax Act, because when a property is confiscated under the PBPT Act, there has to be an officer who administers this property for the government. So he is the administrator is the person who administers this property for the central government. Section 2.1 is the adjudicating authority. Adjudicating authority is like Commissioner Appeals under the Income Tax Act. Friends, earlier we had adjudicating authority sitting only in Delhi. Today, because of Finance Act 2021, which says that the adjudicating authority under the PBPT Act will be the competent authority under SAFEMA. SAFEMA is Smugglers and Foreign Exchange Manipulators Act of 1976. So here now, by virtue of this, the adjudicating authority headquarters is in Mumbai, and the benches are in Mumbai, Delhi, Kolkata and Chennai. So now the adjudicating authority will be sitting at these 4 places in lieu of earlier only one place, that was Delhi. So now all cases, the jurisdiction will is defined. Cases of Delhi and nearby areas, as I mentioned, the jurisdiction is there. So cases will go to Delhi benches. Mumbai and nearby areas will go to Mumbai benches. Similarly, the others. Now here, friends, suffice to say that the real owner or the beneficial owner cannot file a suit against the Benamidar to claim back the rights or title in the Benami property. So if B has purchased the property in the name of Mr. X, he cannot file a suit to recover this property. And if suppose he, now that is given in another section, that if suppose he transfers the property, then it will be treated as null and void under section 6.2. So 6.1 says that a retransfer is not possible, and 6.2 says that if it is transferred, then it will be treated as null and void. Section 24, 26 and 46 are the procedural sections. 24 deals with proceedings before the IO. 26 deals with references before the adjudicating authority, and 46 appeal to the tribunal. Friends, under section 24.1, the notice is issued by the initiating officer. We saw who the initiating officer is. He is the first officer who will set the ball rolling, and he has to record reasons, as we'll see, where the initiating officer, on the basis of material in his possession, has reason to believe that any person is a Benamidar in respect of a property. He may, after recording reasons in writing, issue a notice to the person to show cause within such time as may be specified in the notice why the property should not be treated as Benami property. So, on the basis of material in his possession, which he may receive from either the income tax department, or it could be EOW or police, or various other departments can send these notices. Disproportionate properties, we see so many cases of disproportionate properties being going on against the government officials. So such cases can be sent to the initiating officer, to the PVPT officers, and he is the first officer. The initiating officer is the first officer who uh, passes the order. Now, on the basis of material in his possession, he has to record reasons that he believes that Mr. X is the Benamidar in respect of a property, and he has to record these reasons in writing before he issues a notice under section 24(1) to the Benamidar. Friends, we have decisions under the Income Tax Act. So we should ask the IO for the reasons that he has recorded. We have normally seen that he does not part with the reasons that he has recorded, and we don't see these reasons during the proceedings before him. We should take up this point before the adjudicating authority that we had asked for the reasons that he has recorded, but he's not given the reasons on the basis of the decision of Supreme Court in the case of GK and Drive Shaft 259 ITR 19 Supreme Court. If he still does not give the reasons before the adjudicating authority, we should rely on VSNL, that is Videsh Sanchar Nigam Limited, 340 ITR 66 Bombay High Court, where they have said that if the reasons are not given, then the proceedings, then the order is not valid. So we should ask for the reasons from the initiating officer. Then in 24(1), the initiating officer gives this show cause notice to the Benamidar, and in 24(2), he gives a similar copy to the beneficial owner. Now 24(2) says that if the identity of the beneficial owner is known, then the IO has to serve a copy of the notice issued under 24(1) on such a beneficial owner. Then under section 24(3), here is the work of the initiating officer, that he has to form an opinion that the person in possession of the property which is held Benami, that the person who is holding this property, he may alienate the property during the period specified in the notice, that is 24(1) notice. And if he forms this opinion that the property may be alienated during this period of 90 days, then with the previous approval of the approving authority, that is the joint equivalent to a joint commissioner, he may by an order in writing provisionally attach such property. So friends, you will see that in 24(3), the initiating officer has to first form an opinion that the person who is in possession of this Benami property, that he will alienate the property during the period specified in the notice. And if he comes to this opinion, then with the previous approval of the approving authority, he may, by an order in writing, attach this property, provisionally attach this property. So this is 24(3). Then friends, 24(4), I can explain with the help of this chart. See, what happens is, after this notice is issued under 24(1) and 24(2) to the Benamidar and the beneficial owner respectively, they will respond to these notices under 24(1) and 2. The initiating officer also, on the basis of these responses, he can further make inquiries from third persons, from other persons. He can record statement on oath. He can bring more evidences on record to support his case. And naturally, on the other side, the Benamidar and the beneficial owner will litigate, saying that the property is held not Benami, but the real owner is holding the property, and so on and so forth. So after the 90 days period, because he has to pass the order under 24(4) within 90 days from the issue of the notice, 90 days from the end of the month in which the notice is issued, he has to pass this order under 24(4). Now, a provisional attachment under 24(4) will be made if under 24(3) the IO has passed an order for provisionally attaching a property. After he has considered all these responses, he comes to a conclusion that yes, what he has done is correct, and the provisional attachment should continue. Then in such a case, under 24(4)(a)(1), he will pass an order continuing the provisional attachment that he made under 24(3). This order under 24(4)(a)(1) will be passed only with the prior approval of approving authority, and this order will be effective till the order of the adjudicating authority. So under 24(4), he will pass this order continuing the provisional attachment. Now let's say, if on the basis of the responses filed by the Benamidar or the beneficial owner, the IO thinks that he should not have invoked these provisions of PBPT, then he can revoke this. But this revocation also has to be with the prior approval of the approving authority. Now let's say we come to on the other side. Let's say 24(3) was not invoked. That is, no provisional attachment was made on a particular property. After or during the course of proceedings, the IO thinks that he should make this provisional attachment order. Then in such a case, he can, even though under 24(3) he has not made, under 24(4) he has the authority to provisionally attach a particular property, again with the previous approval of the adjudicating authority. Now here also prior approval of the authority is required. Again, if an order under 24(3) was not made, he can decide that he should not attach a particular property, even though during the proceedings he has asked for details in respect of a particular property. So here also prior approval of the approving authority is required. So this is 24(4), friends. Now, if suppose he wants to pass an order under 24(4) to continue with the provisional attachment of 24(3), then in that case, he should, if he passes this order, then under 24(5), he has to make a reference to the adjudicating authority that he has passed this order under 24(4)(a)(1), continuing or making an attachment of a fresh property. He should drop a case and send it to the adjudicating authority. Now, adjudicating authority, as I said, is like a commissioner appeals. And over there also, he will issue a notice. These are given in the PBPT Act, that he will issue a notice to the Benamidar, the beneficial owner, and the initiating officer, the IO also. As a commissioner appeals does, he gives notice to the assessing officer as well as the appellant. We can skip this, friends. Now, this is important. The adjudicating authority has powers to make further inquiries. As I said, once you go to the adjudicating authority, even he, as commissioner appeals, has powers. Even the adjudicating authority has powers. They can make direct inquiries. They can issue commissions and call for reports and evidences. And the fourth one, that is the adjudicator authority has the powers to attach any other property. This is like an enhancement. If only 2 properties were attached, provisionally attached by the IO, and during the course of proceedings before the adjudicating authority, if the authority feels that a third property also needs to be provisionally attached, then he has the powers to provisionally attach a third property also. So this is like an enhancement. So we have to be very careful when we represent before the adjudicating authority. Then here the timelines are given in section 26. 27, where an order is passed in respect of, now this is the order of confiscation. The adjudicating authority, if has come to the conclusion that this is a Benami transaction, then the adjudicating authority will pass an order to confiscate this property. Now, by virtue of the proviso, even though the property is confiscated, it will not be given effect to if the Benamidar or the beneficial owner, they have filed an appeal to the tribunal under section 46 of the Act. So the order passed by the AA to confiscate the property will be stayed till the order of the appellate tribunal. So a property will not be taken away by the administrator immediately as the AA passes the order. Now 27(2) is an important section which saves the bona fide buyer from the provisions of the PBPT Act, the draconian PBPT Act. If suppose the buyer, without being aware of the provisions being carried out against the Benamidar or the beneficial owner, purchases a property from the Benamidar, then in such a case 27(2) will come to his rescue. And but here the condition is that he should not be aware that this is a Benami property. If he is aware that this is a Benami property, then 27(2) will not apply. So any right of any third person created in such a property with a view to defeat the purposes shall be null and void. Absolutely. Now, friends, the Amendment Act of 2016, there's a huge controversy going on whether the Amendment Act, which came into effect from 1/11/2016, which contains 63 sections, and the original act, the principal act, contained only 9 sections. So these 63 sections are to be given effect to retrospectively, or they are prospective in nature. So this is the controversy, and Rajasthan High Court and Calcutta High Court have taken a favorable view, saying that no, these provisions are like a penalty provision and therefore should not be given retrospective effect, whereas Chhattisgarh High Court and Delhi High Court, they have reasoned out by saying that these are retrospective in nature. The matter is pending before the Supreme Court at the moment. Now, friends, there are some decisions which I thought I would like to share with you on Section 2(9) and Section 24. The onus of establishing that a transaction is Benami is upon the person who asserts it. As in our case, we saw that the IO asserts that a transaction is a Benami transaction within the meaning of Section 2(9, that therefore the subject matter or the subject property is a Benami property, that Mr. X is the Benamidar, so he asserts all this. X is the Benamidar, and that B is the beneficial owner because he is provided for the funds. So he asserts all these one by one, and therefore the Supreme Court said that because you are asserting all this, there has to be evidence to assert this. You have to discharge your onus by bringing acceptable legal evidence on record. No presumptions, assumptions are allowed to set in while giving this order by the IO. So these two decisions, Mangathai Ammal celebrated decision and fair communication, they are on the same point, that the person who asserts, that is the IO, he has to bring the transaction within the 4 corners of Section 2(9) to say that this is a Benami transaction, and he has to say this by bringing all the legally accepted evidences. Then sham transactions, as I mentioned earlier, sham transactions are not covered by the PBPT Act. Kerala High Court in 180 ITR said this. Then friends, Section 24, ACE Infracity Developers. This is on territorial jurisdiction. Here what happened was the IO in Mumbai, he issued a notice under Section 24(1) to the Benamidar, and the Benamidar, being a company, had its registered office in Ghaziabad. So the IO Mumbai could not have issued this notice under 24(1). The matter was taken to the tribunal, and the tribunal said that it is the IO Kanpur who had jurisdiction over Ghaziabad. Only he could have issued this notice under Section 24(1), and the IO Mumbai had no jurisdiction to issue such a notice, and the case was quashed. Then friends, we have another decision on Sunita Gupta. Here, if the what the Delhi High Court said was that if the order of the IO is quashed for some technical reasons, let's say principles of natural justice not followed, or we just saw in the case of territorial jurisdiction. So that was quashed on the basis of some technical default or a procedural default. In such cases, the Delhi High Court said in such cases the IO having jurisdiction is not precluded from reinitiating the proceedings under the PBPT Act, because here there is no time limit given under the PBPT Act. Now, friends, when this issue of time limit comes, uh, you will see that the entire PBPT Act does not talk about any time limits as to how back the IO can go, whether he can try transactions which had happened in 2000, 2002, 2004. Nothing is mentioned under the PBPT Act. So today, if the IO, on the basis of information material in his possession, he issues a notice under 24(1) in respect of a transaction, say of 2004, then the Benamidar and the beneficial owner will have to respond to that. Now friends, 2004, we are today sitting in 2001, 2021, 17 years. Who will keep all the papers and documents? Only the legal papers and documents will be kept, but not the others. So in such a case, I have a decision in the case of Mahindra and Mahindra. Here also, this is under the Income Tax Act, under section 201 and 2011A, where there was no time limit given by the section 201, and the Bombay High Court in this case of Mahindra and Mahindra said that some reasonable time period has to be given. If not given by the Act, then on the basis of other sections, the High Court said that 6 years is a reasonable period within which 2011 or 2011A order ought to have been passed. So similarly, when we come to PBPT Act, some time limit has to be ascribed by the courts, which I'm sure will be taken up at various fora, and courts will decide on this issue. Because friends, under the Income Tax Act also, it is 6 years from the end of the relevant assessment year. Companies Act says it is 10 years, that books of accounts and records have to be maintained for 10 years. Our institute says it is for 7 years. So if this period is given to maintain the records, then I am sure some period needs to be prescribed under the PBPT Act also, that beyond a particular time period, the IO cannot go and raise queries of transactions which had happened prior to that period. Then section 46, friends, is appeal to the appellate tribunal, and it says that the appeal to the tribunal should be filed within 45 days from the date of the order. Now, naturally, if the time period should not be considered from the date of the order, and we have these decisions that wherever this phrase from the date of the order is mentioned, then it should be treated as from the date of receipt of the order. Friends, in this PBPT Act itself, section 49 also supports this view, because an appeal to the High Court, section 46 says it should be filed within 60 days from the date of communication of the order. So there is no reason for a different view be taken for section 46. Then here also the Evidence Act we can leave for the time being and go to the cases. These decisions are important decisions which can be pressed into service before the various authorities, and one can keep them in mind. Now, some practical cases is what I thought I should share with you. These are real cases where we are associated and they are at various fora. Facts of the case of the first case is that there is a company called J Limited incorporated in 2010 and is engaged in the business of construction. In the first year of operation, J issued equity shares to a shareholder at a premium of rupees 490 for a total consideration of rupees 5 crores. Friends, day in, day out, we see these cases where a huge premium is taken by companies and the investors have given this premium. So a question arises of justification and so on and so forth. Really, whether these questions, I mean, they have been diluted by courts to a large extent. J Limited also obtained unsecured loans from its promoters and associate concerns. And with these unsecured loans, they acquired 3 immovable properties. In the second year, this company issues further shares worth 20 crores to 22 shareholders. So in all, 23 shareholders and the promoters. J Limited utilized the said rupees 20 crores to pay its unsecured loans. So this money, 22 shareholders have given as consideration for purchase of shares. This money has been utilized by J Limited to acquire, repay these unsecured loans. These unsecured loans were taken at the time of purchase of those 3 properties. J Limited also obtained secured loans from banks and invested the same in the immovable properties. Total investment today is 150 crores in the immovable properties. J Limited is earning rental income of approximately 1.5 crores. These are facts which only hits the mind of the authorities to say that these are genuine companies and no accommodation entries have been. Under the Income Tax Act, during the proceedings, relying on search proceedings on third parties. Now today, so many cases we see on the basis of accommodation entry providers, search happens, they give statement on oath that we only earn commission and these are all accommodation entries that we have given. So on the basis of these statement on oath, the officers issue notice under 148 and so on and so forth. So under the Income Tax Act, these things are happening. So relying on search proceedings on a third party, the assessing officer made addition under section 68 in the hands of J Limited of 20 crores. Keep in mind that the first shareholder, there was no addition under section 68. They missed out. Holding that J Limited's own unaccounted money has been routed through shareholders. Now, in 2019, on the basis of aforesaid income tax proceedings, the investigation wing referred the case to the IO. So transaction was in 2010 and now the reference is being made in 2019. The IO issued notice under section 24(1) to J Limited and to the 23 shareholders alleging the following. Now this is important, friends. What has the IO alleged? He has said that the equity shares issued by J Limited to 23 shareholders is a Benami property, is a Benami transaction. So the transaction between J Limited and the shareholders, that the shareholders have given money for purchase of shares, this is a Benami transaction. Then he says money received by J Limited on issue of equity shares. So what he says is that this money that is received by J Limited also is a Benami property. And the third that he holds is that the three immovable properties purchased by J Limited are Benami properties. So these three, the IO passes an order and sends a reference to the adjudicating authority. So IO alleged J Limited to be beneficial owner and 23 shareholders to be Benamidars. So what has IO done? He says J Limited is the beneficial owner and the 23 shareholders are Benamidars. IO also provisionally attached under 24(3) the equity shares and the three immovable properties. The said provisional attachment was continued under 24(4)(a)(1) and reference is made to the adjudicating authority. So this is what the IO does. This is the case of the IO. That various statements are recorded under search proceedings under the Income Tax Act, wherein accommodation entry providers have admitted that 23 companies are only paper companies engaged in providing accommodation entries. Now, mind well that these accommodation entry providers have not given a statement under the PBPT Act. These are statements given under the Income Tax Act. That addition has been made under Section 68 in the hands of J Limited. That 23 shareholder companies do not have any business and are shell companies. That monies given by shareholders do not belong to them. That the impugned transaction is bogus. That the huge premium is not justified. That the transaction falls within the ambit of 29A. That the immovable properties represent properties in converted form. So what he says at the end is that the immovable properties represent properties in converted form. We'll come to this. Now, what is the case of the beneficial owner or the Benamidar? First and foremost, as I mentioned, that the transactions are of 2010 and you are now sending the notice or initiating the process in 2019 at the fag end of 2019. So the first argument that we have taken is that the Benami law cannot be applied retrospectively because these transactions are of 2010. Search on the accommodation entry providers also was in 2013. Assessment order in the case of J Limited is in 2014. So all events are prior to 1/11/2016. 1/11/16 is the date when the Amendment Act came into force. So how are you today applying the provisions of the Amendment Act to the transactions which have taken place in 2010? So the first and foremost argument is that that the Amendment Act of 2016 cannot apply retrospectively, and support is taken from Rajasthan High Court in the case of Niharika Jain and Calcutta High Court in the case of Ganpati Dealcom. The second argument is that there is no reason to believe and that there is only reason to suspect. See, now let us go back. What the officer has, what is the IO having in his possession? The IO has the assessment order of J Limited. He has the statements on oath of the entry providers. He has some assessment order of a company where the entry provider has said that this is his company, and in that company commission has been added. So he is taking support, the IO is taking support from that. He has this information only. And what is he alleging? He is saying that this is a transaction which transaction? The transaction of purchase of shares by the alleged Benamidars. So he's saying that this is a Benami transaction. So reason to believe, friends, here I will give you a few decisions on reason to believe, which starts from 103 ITR Lakmani Meval Das, Giriraj Enterprises 103 Taxman.com 188 Bombay High Court, and Coronation Agro 390 ITR 464 Bombay High Court. There can be various, you can write volumes on reason to believe. So what it says is, what reason to believe says is that there has to be a nexus, a live nexus between the material in possession and the conclusion that this is a transaction which is hit by section 2.9. Now let us go back to section 2.9. What does 2.9 say? 2.9a, friends, you will remember said, or let me take you to 2.9a. Can we go? This is 2.9a. Benami transaction means a transaction or an arrangement where a property is transferred to or is held by a person and the consideration for such property has been provided or paid. First of all, friends, please see 2.9 says Benami transaction means. It does not say includes. So when it says means the transaction has to fit in into this clause of 2.9a. Now, when the IO is saying that that the consideration is provided by the company J Limited, this is a bold statement given by him. He does not have any evidence to show that money has flown from J Limited to the company and the company has in turn given the check to J Limited. No evidence at all. So therefore, I said to you, my friends, that there has to be legally accepted evidence on the basis of which the IO states that this is a transaction that will fall under 2.9. So where a property is transferred to or is held by a person and the consideration for such property has been provided by another person. So he has nothing on his records to say that the money has flown from J Limited to the Benamidars. So our first contention that this is not falling under this clause A at all. Further going further, the IO has nowhere in the reference mentioned about the benefit test. If these shares are with the Benamidars, are they held by the Benamidars for the benefit of J Limited? The IO is silent. So therefore, as we saw that to fall under 2.9 capital A, both these subclauses A and B need to be satisfied. So the benefit test not being satisfied by the IO, the transaction cannot fall in 2.9a. This is the contention. Then I'll come to that the IO cannot only rely on proceedings under the different statute. So what is he relying on? He is relying on the assessment order, in my case, that section 68 has been invoked. Now, what is section 68? Section 68 is a deeming fiction, my friends, you are aware. And there is no such fiction under the Benami law. Section 68 says that if there is a credit entry found in my books of account and if I have not been able to explain this credit entry to the satisfaction of the assessing officer, then the assessing officer can treat this as my income. So this is a deeming fiction. We just saw 2.9a. 2.9a says it means, and there is no assumption or presumption that the assessing officer can make while applying section 2.9. So there is no such fiction under the Benami law. the IO cannot rely only on proceedings under a different act. Now he is relying on statements on oath taken of the entry providers under the Income Tax Act. Now friends, you are aware that when the officer, when the search team goes to the place of the person searched, the statement that they will record, they will be guided by the scope of the Income Tax Act. If they are officiating under the Income Tax Act, they will be guided by the Income Tax Act provisions. How can you directly take support of such statement when you are dealing with the PBPT Act? The intent and scope of PBPT Act is different. The scope of IT Act is different. So we have a case of KTMS Muhammad 197 ITR 196 Supreme Court, which says that such statements cannot be taken, direct support cannot be taken off such statements, because the scope of the two acts are different. So the IO has to have reason to believe, and that my transaction will fall within the four corners of section 2(9). He is taking support of a deeming fiction of section 68. He does not have any evidence to show that money has flown. So how can you fit in this as a reason to believe? This can only be treated as a reason to suspect and will not be treated as reason to believe. There are various case laws on this. Then the further argument is that no one in the statements has expressly stated that the impugned transactions are bogus. Those persons, the entry providers, they have only stated in a general manner that we are into the business of providing accommodation entries, we earn this commission and things like that. Specific query has not been raised in respect of this transaction between J Limited and the Benami Das. So therefore, we can take this argument that there is no express mention of the name of J Limited, and in the statement he has not expressly mentioned about this transaction. That no inquiry conducted by the IO before issuing the show cause notice. Now when he has all this material with him, he can go ahead before issuing a notice under 24(1). He can make further inquiries. It is not that he cannot make inquiries. He can make inquiries under section 23. He has to take prior approval of the approving authority, and can cause to make such inquiries as he deems fit to bring the case within the four corners of section 29A, which he has not done, and which we have seen officers don't do it before issuing this notice under 24(1). So the point that I am trying to make is that you can hit very hard on reason to believe on certain technical issues like the reasons are not given to us, and others that will follow. That the approval obtained from the approving authority is mechanical and without application of mind. See, we have section 151 under the Income Tax Act where approval has to be given by the Joint Commissioner or the Commissioner, as the case may be. And we have umpteen number of cases where on application of mind by the Commissioner or by the Joint Commissioner that there was no application of mind before giving the approval to the reasons recorded under section 148. Similar is the case here. In the case of J Limited, the approving authority gives the approval on the same date as he was asked for. So on the same date, and friends, you are aware that this reference or this order under 24(4) or under 24(3) for that matter it's a huge order, and it is humanly not possible for the approving authority to apply his mind on the same day. So how does the approving authority give the signature on the same day that he receives the order of the IO? So therefore, this is a mechanical order and a mechanical approval and without any application of mind. That conclusions are based on assumptions and presumptions. So he does not have the money trail. He does not have. So his order is on the basis of assumptions and presumptions that the onus has not been discharged by the IO. Yes, this we've already dealt with. That J Limited could not have generated. Now, see, in the beginning, I had said that in the first year they have issued these shares, and in the second year they have issued shares worth 20 crores. So in such a short period of time, and the IO says that this is the money of J Limited. Now in such a short period of time, how can J Limited generate this kind of cash to have been given to the Benami Das? So a doubt is created in the minds of the authorities dealing with the case. I mean, we need to create a doubt in the mind of the authority, and this is one such way of doing it. That how does the company J Limited earn 25 crores or generates 25 crores in year one itself? For this, friends, there are some decisions which have said that addition, this is under section 68, addition under section 68 cannot be made in first year if the amounts are huge. This is in the case of Taj Borewells 291 ITR 232 Madras High Court, Bharat Engineering and Construction Company 83 ITR 187, S Hastimal 49 ITR 273 Madras High Court. And recently, Allahabad High Court in 409 ITR 95 in the case of Lal Mohar, they were dealing with the case of a firm where on day one cash credit was there, and which was under reference, which was under test, and the court said that on day one you cannot make an addition under section 68. You have to go behind, lovely exports, go behind and see whose money it is. For holding the equity shares as Benami. Now these are the arguments. There is no material to show that the impugned transaction is bogus. Whatever that material the IO had, we just discussed, there is nothing to show that this is, except for the statements of the entry providers. Now there are so many case laws which have said that the entry providers may have given the statement to save their skin. What was the reason? We are not aware. So you should have given us cross-examination. So all these arguments will be there. Then the second argument is financial health of the shareholder companies, which is good. They have huge reserves. They have share capital, and if you see the balance sheet of the shareholder companies, it does not raise any doubt. J Limited is not required to justify the huge premium in any case. Looking at its financial health, the premium is justified. So this is there's a direct case on this, Chain House International Private Limited 408 ITR 561 MP High Court, where they have said categorically that the premium is to be decided by the board, and it is for the investor to see whether he is right in making that payment. So it is between two persons. How does the income tax authority come into the picture? He cannot sit in the armchair of the businessman and decide as to what the premium should be. The two persons have decided. One has decided the amount of the premium, and the other person is giving the premium. So the income tax authority cannot question. The Supreme Court in the case of Bharat Securities Private Limited, the citation is 113 taxman.com 32 Supreme Court, where they have said that if the three conditions of section 68 are satisfied, then whatever be the premium, you cannot decide, you cannot sit on judgment of the amount of the premium. Then in this case, the first claim of 29A, no material to show that J Limited has paid the consideration. So there is no material with the officer to have come to the conclusion that the money has flown from J Limited. It is only on the basis of the statement on oath of the entry providers. Now, for a moment, we can also say that the entry provider may have said right that they are in accommodation entry providing business, that it is they only earn commission. But how does that how does that mean that J Limited has given the money? So at best, it can be alleged that the money does not belong to the shareholders, but surely it does not. It cannot be said that the money belongs to J Limited. Then the second limb of section 29A, no material to show that shareholders are holding shares for the benefit of J Limited, which I have already mentioned. So no evidence to show that cash has exchanged hands, and therefore the provisions of 29A are not satisfied, and therefore this transaction of issue of shares and getting the money is not a Benami transaction, and therefore not a Benami property. Equity shares not a Benami property. Then for holding the money as Benami property. Now this is ridiculous. I have not seen this in any other order of the IO. What he says is money is the you will see here what he holds is what he holds is that equity shares are Benami property. Money received by J Limited on issue of shares is Benami property. Now he is making money received for shares as Benami property. Now look, the company has issued shares. They have received the money. This can never be a Benami transaction. This can never be a Benami property. The company J Limited has received the money in consideration for issue of shares. Now, if you read the provisions of section just one moment. Two, eight. Benami property means any property which is the subject matter of a Benami transaction and also includes the proceeds from such property. No, 2.9, it says where a property is transferred to or is held by a person and the consideration for such property has been provided. So what is the consideration? Consideration is the money. What is the property? Property is the shares. So money can never be treated as property. It may be the same leg of transaction. It is like me purchasing a land. and giving the consideration. How can consideration for purchase of land, which is a property, there has to be a consideration. So both cannot be, both can never be Benami property. One is a consideration and the other is a property. The consideration cannot be a Benami property. It is only the property that I have purchased at best can be treated as Benami property. So therefore, the two legs of the transaction, first is the issue of shares by J Limited and receipt of shares by the shareholders. Second is the flow of money from the shareholders. Both legs of a single transaction cannot be Benami, and hence money cannot be Benami property in this case. So surely money cannot be Benami property. Shares at best IO can treat as Benami. That is if at all it falls under 29A. As we have seen that 29A does not get triggered, that's a different thing. Now, if money cannot be treated as a Benami property, then what has happened is that the company J Limited has utilized this money to purchase immobile properties. And if this money, which cannot be treated as Benami property, if this money has been utilized for purchase of immobile properties, these immobile properties cannot be treated as Benami property. So in the entire transaction, as I mentioned, at best the IO can only say that these shares, if at all the provisions of 29A he is able to satisfy, then shares can be treated as Benami. But surely once the money is received by J Limited and J Limited purchases the properties, these properties cannot be treated as, because see what happens is whose money is this? It is J Limited money. The name, the property is in the name of J Limited. So where are the two persons involved in this transaction? It is J Limited money. It is the property is in the name of J Limited. Question ends there. PBPT Act does not apply to J Limited for these three properties. So these are the arguments. There is no dispute on the ownership of the properties. J Limited is the legal owner and beneficial owner. J Limited is both. There is the question of Benami. It cannot be a property in converted form. What the officer says is that that this is a property in converted form. If money is not, what can be a converted form? If suppose shares are sold by the Benami dars and they would have purchased these immobile properties, then one can say that this is conversion of one property to the other, and therefore it is in the converted form. Here in this case, really, if you see my balance sheet, shares are on the liability side, the assets is on the asset side. These three immobile properties are on the asset side. To say that this is these properties are in the converted form can never be accepted, because it is the share capital is the liability, and the immobile properties cannot be considered as property in converted form. And neither these shares which are held by the Benami are here in my balance sheet. So that is all these are not fitting into the context of 29. Shares are liabilities and the immobile properties are assets. How can a liability be converted into an asset? It is not the case that shares are sold and that money is used to acquire immobile property. In any case, shares are not of J Limited to sell. It also cannot be said that money received on issue of shares is converted into immobile properties, and hence immobile properties are Benami property. Since money cannot be said to be Benami property, any converted form of money cannot be a Benami. So friends, this case one, we are still before the adjudicating authority, and let's see how things turn out. Quickly, we can see the other cases. This also may take some time. We can consider this case. Here, the IO issued notice under 24(1) for alleged Benami property of rupees 33 crores, provisionally attaching entire construction project worth much more than 500 crores. Now, what the IO does is that, as we saw, that can a property be a Benami property as well as not a Benami property? So here in this case, they have attached only for 33 crores. They have provisionally attached the entire project worth, which is 500 crores. So the company went to the Bombay High Court and suggested a formula that if it is only a matter of 33 crores, then flats valuing 33 crores, let that be put under attachment so that the entire project is not will not suffer for this attachment. And this was accepted. So this is one thing which one can keep in mind. Friends, I think we can conclude here, and we will have some time for question answers. Thank you for the patient hearing. It is my pleasure to have come on this webinar.
Okay, so we have some questions. Can we take it up now, sir? You can stop the screen sharing
Yes.
now. I'll share it from my end.
Yeah. Sure.
Is my screen visible, sir?
Yes. These are different queries, is it? The first one is A is the owner of a property. He obtains unaccounted cash from B towards purchase consideration. The property is not registered in favor of B. Whether the Benami Prohibitions Act could be invoked. So A is the owner of the property. He obtains unaccounted cash from B towards purchase consideration. No. So who is the owner of the property? A is the owner and unaccounted cash from B towards purchase consideration. But the property is still in the name of A. So A is enjoying the property as well as the money. Is that the case? Can someone clarify?
So I think the participant is trying to ask whether what happens when the property is registered not in the name of B but in the name of somebody else. Then in such case, can the provisions of Benami Prohibitions Act be invoked?
No. So B is giving the consideration to A, and it will be transferred in the name of X. Surely it will apply, nahi? Can we go to 2?
Yes, sir. I think
B develops land belonging to A and constructs a multi-storied apartment. B's share of undivided share in land is not registered in the JV for more than 20 years and B dies. Whether A is holding the UDS will be treated as Benami property. UDS means undivided share. So B develops a land belonging to A and constructs a multi-storied apartment. B's share of undivided share in land not registered in the JV for more than 20 years. It is not registered in the JV. So how is so what is the accounting for this then in that case? Really, I think if the querist can clarify these things. We go to 3. A buys a property for 5 crore in the name of his wife by paying 4 crores by check and 1 crore by unaccounted cash. So it is in the name of his wife. So known sources, this becomes Benami transaction. Will the whole property become Benami property or only proportionate part of it becomes Benami? No, it is only the proportionate part. The whole part cannot become Benami because 4 crores is going from known sources and it is in the name of spouse. So here the condition of only known sources is there and joint owning the property is not there in case of spouse and child. So it is only part of the property that can be treated as Benami property, not the entire property. Fourth, what are the powers Benami Act provides to its authorities with respect to Benami assets located outside the country for recovery? Outside the country, if what are the powers Benami Act provides to its authorities with respect to Benami assets located outside the country for recovery? What the querist is asking for is only for recovery purposes which are located outside India. But the first thing that the IO will do is if an asset is located outside India, then he will apply the Black Money Act to such an asset. And then the recovery is possible because under the Black Money Act, they will get hold of the property itself. Can we see 5? Can you scroll it up? If a person has purchased a property from before Benami Transaction Amendment Act where funds are provided by his relatives, does this amount to Benami transaction if he has repaid the loan amount to few and not to others? If a person has purchased a property before Benami Transaction Amendment Act, that is pre-16, the funds are provided by his relatives, does this amount to? No, if the relatives have given loan, then where is the question? This will not be treated as a Benami transaction. See, if such transactions would come under the PBPT Act, then the giving and taking of loans will be hit. So that is not. This will not get covered under the PBPT Act. Any other question?
Those were the questions. We came to the end of the session. So I'll stop sharing, sir. Over to Venkesh.
Thank you very much for the wonderful session, sir. And the session was truly informative and very interesting. And you started off with the basics of what the Benami law says and what are the how do we differentiate between a Benami transaction versus a sham transaction, and with the detailed analysis of Shrima Meenakshi Mills Limited's case, and how sham transactions would not be covered under the Benami law, and also mentioned in detail about the various critical sections that one has to know when reading the Benami Act, which is section 2 subsection 10, 2 subsection 8, and 2 subsection 26, and also you explained in depth about section 2 subsection 9 regarding the Benami transactions, and along with the exceptions and what are the detailed explanation for each and every clause of that particular section, and also about section 24.1, 24.4, and all the other attachments and the provisions regarding adjudication, and also section 26 regarding the adjudication of Benami properties. And you also mentioned about the controversy regarding the new 2016 act which has been introduced, compared vis-a-vis 1988, and what are the different reasons why this has led to the controversy. And you also explained in detail and you analyzed in depth regarding various case studies or case laws which are very applicable in today's changing scenario. We would like to thank you very much for the time and the knowledge that was shared today with us today, sir. And I also would like to place on record the thanks to all the participants who are with us here today, in spite of their busy schedule. And I would also like to thank the SIRC office executives for the wonderful coordination today. Thank you all for attending today. Thank you very much.